Hi everyone, welcome to the weekly share update where we take a look at the performance of the NZSX 50 over the last week. Before I go across and share my screen, I do have to do the housekeeping. You probably know it off by heart, and that is that this is intended as educational purposes only, certainly not personalised financial advice in any stretch of the matter. So let's take a look. Okay, so I've got the main index up here on the screen for the New Zealand Stock Exchange, which of course is the top 50 companies. And I've spoken about this a little bit actually. We have obviously got this line of resistance here at around that 12,800 level. And you can see with the close or last week's candle that sure, it ended up down a little bit for the week, but it's nothing to be concerned about. It's once again touched that line of resistance. Now, just looking at that last candle, if you're into reading candlesticks, it's showing potentially, because there's a bottom tail on that, and it's quite a significant one, this is sort of like a hammer, that there is still a lot of buying pressure out there, which is a great sign. And I spoke about it last week and said that there are obviously potentially a lot of people out there taking profit off. So for me, that is a very good positive sign. Where it's going to go, who knows, but it is indicating to me that potentially the share market is going to break through that line of resistance. You can see down the bottom here as well. Oops, my pen. There was very little, it disappeared. But anyway, beforehand, there was very little volume on, even though we were down for the week. So that too is a good indicator. Okay, let's run some moving averages on it. I'm going to put the 200 moving average on, and that just gives a general idea as to where the market's trending. So as you can see, the overall market is trading above the 200 period moving average, and I've just used a simple moving average, which is a good sign. It does look like it's sort of a little bit flat, but that's okay. Like I've just said, we've had about 4 weeks now where the market keeps touching that 12,800 point level, and it can't seem to break through. At one point, it will actually break through it, obviously one way or the other, but it's certainly, in my view, gearing up that it's looking like we could be going to break through on the upside, which is a very, very good positive indicator. Let's just change that 200 moving average, and we'll just put on my normal 30 exponential. Here we go. That is still showing up, which again is what we want. And let's also put on the 15-week moving average as well. So there we go. So the market pretty much waiting for both these 15 and 30-week exponential moving averages to pretty much catch up to it. And these are both looking like they're trading on the positive side, which again is a great indicator for me. Just glancing down the chart here as well, I've spoken a little bit about this before, the MACD, which is the moving average, convergence, divergence. Again, I've got the 15 and 30-week period exponential moving averages on here, and you can still see that they're trending up as well, which is great. So again, it's looking positive. The only reason I use this one down the bottom is to actually see if there is potentially some sort of divergence as to what the market's doing and perhaps what's happening behind the scenes. And you can see that around this period here, sort of November last year, you could see the market was in a bit of an uptrend. However, these moving averages down here under the MACD was certainly saying something to the contrary. But at this stage, they are both saying a positive direction, which is great. Now, I'm also going to I'm going to have a look at the New Zealand Grossing Index. So this is actually an ETF, so an exchange traded fund that invests into the main board of the New Zealand Stock Exchange, and it's based in accordance to how much capitalisation each share is worth. So it's weighted heavily to Spark, which is our biggest trader or biggest share on our stock exchange at the moment. So this one pretty much mirrors exactly what's happening in our main board, because obviously you can't just go and buy into the main board. You have to do it through an ETF, and this is the one that you would be using. So the ticker code for that is NZSX. NZG. And like I say, that's pretty much mirroring, which I would expect, the main board. Now let's have a look and just also bring up another one, which is the ticker code that I'm going to pop in here is FNZ. And again, this is an ETF, but what it does is it is weighted, it's equal weight to all 50 companies that are on the stock exchange. So we're not just having an imbalance to the top companies on our stock exchange. And you can see that this one here as well as it's range bound. What I've also found though, when I look at the shares individually each week, again, our market has been driven by about 8 or so performers. It's not general participation throughout the whole index or the whole top 50 companies or even 50% of them. So that sort of means to me that, because that could be why we're in a bit of a sideways pattern. You haven't got a lot of shares, like the saying goes, if a rising tide floats all boats. We're not seeing that yet, but just because the New Zealand share market's been going up, it hasn't been taking the majority of the shares with it. It's only certainly been a handful. But these are a couple of exchange traded funds or ETFs that you can get exposure to if you're wanting to invest into the New Zealand market. So like I just said, this one here is FNZ, and that's got an equal weight between all of the shares that are on our main board. So anyway, I'll stop sharing. I hope you're getting some value from this. Please let me know. Let me know if there's anything you would like me to perhaps educate you on. I'm extremely passionate about the share market, so happy to teach what I know and get it out there. So until next week, Thursday, we're taking a look at, if you like to watch the share review, we're looking at Argosy properties. But until next week, take care.